for watching, you guys. I got House Hack Jack here and his lovely house hack down here in Ankeny.
Yep.
Thanks for having me over, Jackson.
Absolutely, man. Happy to have you here.
Yeah, this is fun. I like doing this, and it's just fun getting someone else's opinion what they're doing in real estate. And start out, tell me a little bit about your real estate investing journey. I know you got your license back then, but what kind of drove you to where you are now?
Yeah, so I got my license in 2018. I just had my 5-year anniversary in October, which is sweet. Yeah, kind of coming out right out of college, all my friends had, internships lined up for work, and I'm just sitting here I don't want to work in the corporate world. I went to school for business management and entrepreneurship, so, real estate kind of ties into that too, because you're really running your own business. And so when you're running your own business, you kind of have the flexibility on where you want to put your time and your money. So as I was learning about real estate, all the different ways that you can make money, whether that's with cash flow or appreciation, et cetera, it really kind of got me into the investing side of it. And so in 2019, we bought our first townhome up in Ames, and that was our first house hack. So living there, at the time I was single, a couple of buddies from college were living with me. So they were paying the rent, they lived in a couple of bedrooms, I lived in the basement kind of thing. It was one of those situations.
Really went all out.
Yeah, I was like, you know what, I'm tired of paying rent, and and it's a nice place, it's a win-win for everybody. So that was the first thing. I was like, once you kind of get that first deal going and it goes really well, okay, maybe we can repeat this. Let's do it the next time. So from there, we moved down to Ankeny, bought a place down here, and turned that into a full-time rental. So now, and we bought that with owner-occupied financing, which is kind of the big thing, at least for what we do, because owner-occupied financing have the best financing terms. You get that loan stretched out over 30 years as opposed to 20. Down payment, requirement is much lower, so your money into the property on the front end is lower. You also get a little bit lower interest rate as well. So going from Ames to Ankeny, completely different market, found out we loved it here. And so we did that 2 more times, and now we're on our 4th place where we're at now. So we've got 3 full-time rentals, 1 in Ames, 2 in Ankeny, and we're living on our 4th. So the snowball effect, it's real. I think that's the biggest thing, is you just got to get that first one, make the jump, just do it, and then it's very low risk when you do it that way as well.
The thing that I felt is getting that first rent check. I don't know if it was for you, but it was like crack.
Yeah, it's huge.
Shit. Because I'm used to, when you come from working your whole life for money, you're like, holy shit, I didn't really do much this month, and I still got paid the rent or whatever. It wasn't probably a lot. I think my first rent was $250.
Yeah.
After all expenses, but it was man, that actually works.
Exactly. You're sitting there, it's like, I was living in this place and I just got paid to live here. And everybody needs a place to live. We would have this expense whether we were renting or if we bought it and didn't have renters. But having those rent checks coming in, it costs $1,000 all expenses, but you get $1,200 back. Yep. You get paid $200 a month to live there.
Yeah.
That's the house hack side of it, is buying a place, living in one of the bedrooms or units. It could be multifamily, getting paid to live there.
So that's what were the numbers kind of like on your first place in Ames?
First place, we still have it. The total, and this is the crazy part, because it's not the case nowadays, but total expenses on that place are still around $800, give or take, depending on the season. $800 per month, and that rents out for $1,725 now.
Wow. So
we make about $900 per month on that.
What was it like when you lived there?
Yeah, so it was
like a true house hack.
Yeah. It actually was fun. That was kind of what was fun about that place in particular, and kind of what got me started, is because I was living with my friends, and I was living in Ames already. So, but the year before that we were renting. So it's like I would be living with these guys anyways, whether I was renting or owned the place. So the living situation or the living scenario didn't change. But yeah, it was so it was fun. It was just like we were living in college town and having fun, but I just wasn't paying to live there anymore. So
those guys would pay you what, $400 a month or something?
Yeah, it was about $600 a month. So and we split utilities. So I really didn't make any money while I was living there that first year. Broke even, when you got utilities, the HOA fee, all that stuff adds up. I maybe made $50 a month.
It got you in.
Yeah, it got me in. And so I was living in the 3rd bedroom and renting out the other 2. And so when we moved out, that's when that 3rd bedroom started to become rented. And that's where the real cash flow started to come in. That's why our gap goes from, $50 a month cash flow when you're living there. When you start to rent out the 3rd one, now we're at, 800, 900 per month.
Yeah. I think that's going to become like initially you were just thinking, oh, if I break even, that's great. And I think some investors in this new market are going to kind of have to switch their perspective a little bit. Because I think a lot of people got so damn greedy, especially here in our market. They were just expecting to buy a home for $200,000 and rent it for $1,700 or whatever and make $300, you know, and after management and everything, but interest was get 3% interest on a commercial loan. So now I think people got to kind of shift their perspective, and like even if you buy an investment property and breaks even, you're still getting all the other benefits of, you know, tax implications, debt pay down. Like you're not paying for anything. The tenant's going to work for you for the first half of their day, half your mortgage.
100%.